Hi everyone, I'm Mark Phillips. I'm the producer of The Tape. I'm also a financial advisor at Harvested Financial. And because of that, I have to remind you that nothing here constitutes financial advice. It's not an advertisement to buy or sell securities or any products. It's intended solely for educational purposes about the software that I'm about to show you. If you have any questions about that, please check out my website at harvestedfinancial.com. Now, without further ado, today we're going to talk about one of our newest reports, which is called the Screener. And so right over here on my homepage, I'm going to head over to the screener. I call it the opportunity screener because that's the number one thing it's looking for. No matter what your strategy is, you can find all kinds of different tickers, strategies within that to apply some edge capture in the options market. So whether you're building a portfolio, whether you're looking for opportunistic trades in covered calls or condors, risk reversals, or even if you're looking to do some spreads, I'm going to show you today how to use the opportunity screener to find some of those. So we have our menu here on the left, first off, that has a number of different filters. So this is going to look at the entire universe of issues. If you're familiar with some of my other reports like VRP, Stable Skew, a lot of my indicators, I only look at the top 250 most liquid names because they're the ones that are able to produce those indicators. Just because of the strike listings and depths and all that, kind of granularity is really only available in those names. But for cash put writing, covered call writing, you don't necessarily need that liquidity. You always want to check for it, but that's why I include all the issues in a screener like this, because there are strategies that want to go down that path. So I'm going to screen. This is going to have no filter on it to begin with, but we're going to initially screen like for average daily volume, things like market cap, dividend yield, depending on what strategy you might be putting on, that's interesting. Price filters, are you building a basket where you might only have $5,000 to put into something but want to spread it across low value stocks? Sector, are you running a wheel that only looks at MLPs or REITs, or industry similar to that? So industry being a sub category of sector. And then finally, as far as a filter, I have the ability to only select the top 250 names in terms of liquidity. Sort of as I was suggesting before, my indicators only calculate on those names. So to the extent that something's outside of that range, it'll just be showing none values like we see here for the Condor 30 indicators. For these purposes, I'm going to use the LIC top 250 anyway. Really, those are the names I like to trade. I'll make some exceptions in certain sectors, but for the most part, when I'm rolling strategies and tailoring positions, I really like those top 250 names. The first way we're going to talk about using the screener is for building a portfolio. So I mean this in terms of you're looking to accomplish something that's more medium and long term. You're setting up an option strategy. Maybe it's an overlay. Maybe it's an ongoing wheel. But you're looking to set up something based on the fundamentals of a name more likely. You're kind of moving through this process by selecting a name first. I like Bank of America because it's high dividend yield, or Starwood because of that. That's an example of that. That's not financial advice. But you're approaching it from that fundamental path first, and then coming to options for the strategies that you can even further refine kind of your exposure to that name. I compare that to something that's more opportunistic, which we'll talk about in just a second, but that's looking for what's happening in options first. When I'm in the building portfolio mode, I'm looking at overwrites, I'm looking at wheels, I'm looking at gull protective strategies. So if I'm kind of coming to the market with that perspective, I've got my top 250 filter here, and then I want to choose some sorting indicators. So that's sort of the main axe of this report is what's going to be your sorting indicators. So by that I mean that's sort of your initial top level indicator that you're screening for. Defaults to the close 30-day historical volatility, but you can see there's a whole range of different values. We can look for, volatility at all the different tenors. We can look at Bollinger Bands at different ranges. I'll go into more detail about the Bollinger Band calculations in a little bit later on. But we can look for Condor values, all the different indicators that I have, which you should check out the website, harvestedfinancial.com/indicators. And I'll go into the full detail of the calculations for each of those. But we can rank by covered call pricing. We can cash put pricing. Again, Falcon, historical volatility, the Parkinson's measure. Actually, a new filter for here is the IV net of HV. So we also can screen by VRP, which I'm sure you've heard me talk about before. But the IV net of HV is the current implied volatility minus the historical volatility that's been realized over that same period. So if we're looking at 30, we say what's the implied vol at 30 minus what the last 30 days of historical vol being. How much is implied volatility aligning with what's happened in the recent past. Just as a footnote reminder, VRP looks at the implied volatility X days ago and compares that to the realized volatility during that term. So sort of how effective was our predictor 30 days ago or 10 days ago in that case. IV net HV, the different liquidity rankings, and all the different VRP things. So there are a number of different items that you can screen for here. If I'm thinking about overwrites, an obvious one to go with first would be covered call pricing. So this is at 30 days. That might sound like the obvious one to go with first, but depending on what you're looking for, you might not necessarily want to be going with the names that have the highest covered call number. That's going to indicate that there's a fairly high implied volatility, which, I think that tends to be more on the opportunistic perspective of a covered call. Certainly viable strategy, but you're not going to find your sort of slow and steady medium long-term investment. SPY will probably never show up here. It's the UVIXs, the Nikolas. I wouldn't necessarily consider a UVIX a covered call candidate, but it's got high call skew. These are the type of the names that you'll see there. But you can go top or bottom, so you can say what are the highest values and what are the lowest values. These are the boring names that have pretty low implied volatility. We can see that at the money vol 30 column here that, at a 12 vol, the 30-day covered call is only worth about 60 basis points of the stock price. So the covered call 30 is actually at the 30 delta also in addition to the 30-day tenor. So, there might be some call skew to that too. But, we have our SPY and SPX. We see those traded about 60 bips a month in terms of the covered call ranking. Maybe something like a dividend yield is actually what you want to be looking at in a covered call name. So if I look at I don't want to look at the bottom. I want to look at the high div yields. And, maybe it's because stock price has fallen off. That's a worthwhile consideration if you're looking at a dividend yield percentage. But maybe there are some names that catch your eye. Pfizer's, Verizon's, 3M's of the world. These are some pretty steady industrial names. So looking at these high div yielders, where are those covered calls trading? These all look in the 1.63. Again, this is the percent of the stock price. So the 30-day, 30 delta covered call in Pfizer is worth 1.3 or 63% of the stock price. You can look at where the historical vol has been trading. Interesting contextualizing factor. But depending on your strategy, you might want to pull up this column chooser. I've sort of got my default covered call ones here, the ones that I like. But really any of the indicators you can also choose to see as columns also. So you have all your IV columns, you have all your VRP columns, your Bali columns, your IV net HV. So from a covered call perspective, that might be, I'll uncheck the column chooser there, bye-bye. One approach to using this, starting to build a portfolio of those. The cash put side of things, another interesting portfolio thing. Maybe you're using it to start into a wheel trade. You're trying to find those cash puts. Maybe you're just interested in selling cash puts as a way to monetize a balance there. So I might pull up my cash put indicator and see where some of those rank. So popped up right here, some of the highest put values. No surprise to DJT, Nikola again, Riley. Some of these, if you're familiar with our expensive put report, you've been catching the CGCs and AMCs of the world there too. Just kind of just another different lens on ways to find that cash put writing opportunity. Often when you're building a wheel, building a portfolio, I just want to make sure to point out the industry filter that you can, say you only want REITs because they're going to be high dividend paying. Oops. Looks like there are no REITs in the LickTalk 250. So we'll have to find a different sector. Because cash put, they won't have any cash put values. So now I'm going to find my REITs with the highest dividend yield. That might be a better way to sort for these. So again, another good example of why I do include the non-top 250 here, because while there's okay liquidity in some of these names, they certainly don't crack the top 250. So building a portfolio, lots of different ways to use the opportunity screener to build a portfolio of a name, a bunch of different names for a number of different overlay strategies. Moving into the more opportunistic approach to using the opportunity screener, as the name suggests, we might be looking at those covered calls, like I mentioned, that have the high value. We might be looking to put together spreads or condors, more complicated trade structures that take advantage of the volatility levels. So if I'm thinking about something on a vol perspective, I might pull up my IV net HV. And I'm just going to go back. Don't need the cash put value when I'm thinking about. I do like the Condor 30 indicator though. So I'm going to have VRP at 30 and IV net HV to kind of look at some of these condors. I'm going to apply those column selections, remove my column chooser, and here we go. So we are sorting by Cond 30 values. Looking at the top liquidity names that have the highest Condor prices. So all the way at the top of Beyond, almost 7% of the stock price. Last 30 days, historical vol is only 42, but at the money vol is currently about 135, creating a nice big 92 number right there, or almost 93. Suspect earnings is soon. I don't have it in this report specifically yet, but the VRP has also been historically high. It's kind of interesting to see that some of these high IV net HVs have also had some of that really high VRP. One of my perspectives on VRP is that it's a measure of market efficiency. And even though these are in the lick top 250s, they're at the less efficient end. It's hard to price volatility in some of these issues. So in a lot of ways, that's why there can be a lot of padding, but also why it's important to use defensive spreads like condors when you're putting on volatility trades, because ECB and negative 30 VRP number would certainly hurt if you had an unrisk managed spread on. So opportunistically, that's where I tend to go for this report with the issues at the biggest extremes at a high indicator pricing level. We might actually go into a Bollinger Band consideration where we're an extreme in price. We're looking for something that there's a market inefficiency, a setup that says that looks really good to capture right now. So when we're thinking about spreads, from a VRP perspective, condors make sense. If you're not necessarily making a market direction or taking a position on the market direction, you'd want to use a condor structure. But if you might have a little bit of an axe in market direction because of a mean reversion principle or because perhaps of a momentum principle, Bollinger Bands are a great way to think about where a stock is relative to its sort of recent trading range. Maybe I'll pull up the Bolli 50 STD1. So what that means is Bolli stands for Bollinger. 50 is the moving average, and then the standard deviation is either one or two standard deviations around that moving average. So this is going to be, everyone has their own different indicators, what they like. I think it depends on what strategy you're using, whether you're going for a short-term bounce, a more medium-term bounce, lots of different ways to do that. So that's why I offer so many different ones here. But we're saying now the figure in the column, that says the percent the current stock price is compared to the range of that Bollinger Band. So 100 would be right at the band. 400 would be almost 4 times that band. So Snap at $14.52 has had quite a rally recently. It's far above that 50-day Bollinger Band. So on the upside, if you're looking at this from a mean reversion perspective, you might be expecting a retracement then. If you're looking at this from a momentum perspective, maybe there's more to go. So with the Bollinger Bands, and actually I will queue up Snap here because that'll be fun to look at. But with the Bollinger Bands there, an interesting trade type would be sort of a spread trade type where we're going for a broken wing butterfly that leans into direction and vol, or we're going with a simple call spread. Maybe you want to sell cash puts when things are at a Bollinger Band. It doesn't necessarily have to be a spread. It could just be put spreads. Lots of different ways to trade these. But maybe I'm taking that vol perspective that I mentioned with a broken wing butterfly. I'm going to do a video specifically on broken wing butterflies coming up soon. So definitely stay tuned for that. But at a high level, what that spread will let you do is capture both a volatility direction, typically short vol, and a directional position. So it's sort of like a call spread with a volatility kicker. And if I'm looking at these that, I think some of these have rallied too much. That's where you can start including some of your own fundamental analysis about where you think Snap prices has gone, or Riley, or what any of these names here. So you know what? I think Goldman's due for mean reversion, just based on some of the other things you might know, and kind of combine that fundamental analysis with what the volatility levels are telling you. If you see some alignment between those two things, that's a good reason to put on a trade and believe you have some edge on the buy side there. So if I'm seeing that, maybe in Riley, that not only is it a high Bollinger level, but we also see pretty juicy at the money vol. That VRP number of 9 is not the highest VRP we've seen, but 9's not nothing. And currently the past 30 days compared to the forward-looking 30 days, that IV net HV is 36. So, we only traded a 132 vol, and stock's implying a little bit more. So potentially an interesting reversion opportunity that you can capture both that vol and direction. So there, potentially multiple ways you can combine the indicators here, depending on what sorts of spreads and thesis you have. So let's go back to Snap, actually. That one, that might be the opposite. IV net HV is negative 25. So it's been moving around a lot more. It's been moving at an 80, but currently vol is only 55. This could be an example where you want to buy a spread and get long some gamma. So you really have to combine what you believe about the issue with what the options indicators are telling you. So we'll do a deeper dive into Snap here. And this is the stock price over the past year now, but I'm going to layer on that 50 STD1. So obviously we just had quite a bit of a pop, and if you want to fade that sort of earnings pop, that would be the time. Maybe you believe there's momentum coming out of it. As recently as January, they had their last earnings and it dumped the other way. So I can go both directions on this. I think that's where I'll say you have to combine both the fundamental and the technical when you're kind of looking at an individual position like this. But we layered those Bollinger Bands on, and we can also add some other cool values. We can see how that at the money vol has tracked. We're seeing some pretty serious spikes. We can also add something like a comparison of what VRP has been like in this historically. So I'll go down to VRP 30 if we're looking at a 30-day level. You can see it's pretty all over the place, consistently positive, but some of these recent moves blew out the implieds. So it obviously has the potential to move. There are a lot of different indicators that you can use here to find up top, and then combine them even visually to see what story you want to write. With vol at those levels, maybe this is an argument to be getting long using, like I said, you could use a simple put spread. You could use a broken wing also to get long. They don't necessarily have to be short. But there are some good spread tools that you can also use the screener to help you find. Finally, we might ask ourselves, we've talked about when to use it. We might ask ourselves, what's next? So I have this idea. I have Snap thesis. I have a Riley thesis. Maybe it's just a covered call. What's next is you want to take a look at our other video where we talk about the strip. So once you have sort of an idea about what I want to be doing with volatility, where these indicators have been over time, where they are relative to other names in the market, what are the most extreme names in the market, you can take a look at our strip where you apply that to an options strip and the actual strikes in the marketplace. The indicators are sort of theoretical values, so we can kind of compare them efficiently across issues and over time. But when the rubber's got to hit the road, you need to select strikes and you need to get a fill price at the end of the day. So that's where the strip can help you that. I love these tools as a combination, and they're part of our analyst package because we screen and then strip and then you execute. And that's sort of the opportunity finding process where you can find covered calls, you can find spreads, you can do investment structures, you can do opportunistic structures. So a lot of different ways, a lot of different powerful option solutions just in these combinations of screen and then strip, and then you execute. If you have any questions, I'd love to hear them. So please feel free and post in the comments. And make sure you also subscribe, because that's how you're going to find about all those other cool new videos. I mentioned something coming about broken wing butterflies, and I also mentioned that strip video just now. So make sure you subscribe, make sure you hit like, and most importantly, check out TheTape.Report, where you can get a free trial and see all of this for yourselves. So thanks so much for joining me today, and happy trading.